Hello traders, this is Dr. Zain Agha from zwinner.com. Today I bring you a great trading system. You can trade on Forex, stocks and shares, commodities, anywhere you like. Now, this trading system is based on an indicator called Vortex. Now, this Vortex indicator was developed in 2009, but it didn't get any popularity. But just recently it started getting popular and more people started using it. So I'm going to show you how to use it in combination with other indicators. On its own, it doesn't give you 100% profitable trades. So I will bring in the indicator, the Vortex indicator, and I will show you how it's done. Now this is a daily chart of Euro US dollar. Now this by default it has the value of 14. You need to change it to 8. Okay, and then this color dark green, change it to lime so it's easily visible, and the width should be a little bit thicker than what it is, and levels, okay, in level add 1. This is 1, okay, and give it the color yellow. Here it is. This is the Vortex indicator. Now this is trend-based indicator. It has got the green line, which is an uptrend, and the red line, which is a downtrend. So when the green line is going up, it's showing the market is an uptrend, and when the green line is going down and the red line is coming up, that means the market is in downtrend. So what most of the traders do, they take the cross of the red line and the green line as a signal to buy or to sell. For example, here we have the cross. If you find it here, this is the buy signal, so you buy it here at 101.08681, and you continue up until you get the exit signal. But you don't get the exit signal just like that. And what the people, most of them, they do, when it crosses the level 1, that's the time that they exit the trade. Okay, similarly, now the red line has gone up here and it's going up, so that means the market is a downtrend. So you sell it here, and then you come down here, and then here again market goes into an uptrend. And the thing is, this is a very good indicator for reversals. If the market is reversing, then it will show a good signal. Now, you can't trade it on its own, so you need to have other indicators with it. So let's go here and see what's happening here. You can see here the green line has crossed the red line and it's going up. So this is an indicator telling you the market is in uptrend, and you buy it here and you continue. See, the market keeps going up, and then it starts coming back down, and then down, and then it starts going back up again. Right, now on its own is not a very good indicator, but for the entry point it's a very good indicator. Now what you do, you add a moving average to it. You put a moving average 21 period and give it a dark orange color or whatever you like. This is the dark orange, or if you like you can give it yellow color and click OK, right? So now what you can do, you buy only when the candles are above this moving average, and you sell only when the candles are below this moving average. So for example, here you get a signal here to buy, and you wait until you see the candle going above the moving average, so you buy it here and you stay in the market until you see the line bending down. It bends when you have a red candle. Okay, so you could have come out here, this is bending down and this one is bending down, so you can come out here at this level. If you did that, then you will get about let's go to the lower time frame, the 4 hour. See how it's performing there, and you get a message here that 240 minutes, this 4 minute negative vortex cross, so here it is, there it is. See, negative vortex cross, you got this buy sell signal here, but the candles are above the 21 period moving average. When the candle goes below it, then you can sell. Okay, now let me add one more indicator. The other indicator is my Z-winner RSI stochastics, this one. These are the settings, don't touch them, just leave them as they are. Color, leave, level. Okay, by default it's got level 20 and 80. Add another level 50. Level 50, give it a yellow line, yellow color, and click OK. There it is. This is the Z-winner RSI stochastics. Now I'm going to give it the level 50. Now you'll get the level 50 here, there it is. Okay, now when you get the signal, now this is on the H4 4 hour, but most of you don't like to trade on the higher time frame because it's very boring. So I'm going to change it to a lower time frame of 1 hour. Okay, let's have a look here. Here you get the crossover. Here you get the crossover, but it is below the line. It has to be above the line. So you get the crossover above the line here. Okay, so this is giving you a sell signal. So you wait until a candle closes below the line, 21 period moving average, and then also you have a look what is the Z-winner RSI stochastics doing. So if I take a line here and put it here, this is where you get the signal, and you have a look here also. The Z-winner RSI stochastic is pointing down, so pointing down means you need to sell it. So what you do, You sell when it comes below the 21 moving average, 21 period moving average. So you sell it here, okay, and then the market goes up and up here. Okay, now you sold here. Now you're going to put a stop loss on the highest most recent high, which is this one. The high was 1.22394, about 5 pips above it. 394, 399, 1.22399. There it is. Okay, so this is going to be your stop loss. Now the market, you are in here, the market went up and up, it came down again, went up and started coming back down. It didn't touch your stop loss, and then now it's going back down. Okay, now where to exit? Okay, now this is the ideal place to exit, but you don't know. In your hindsight, we can see this is the best place to exit, but at that moment we don't know. But you keep looking at this Z-winner RSI stochastics is going up here, so this is giving you a sell signal, buy signal, or telling you to get out, but it came back down. And then it started going back, it crossed it, and then you either take this as your exit signal, which is going to be here, somewhere here, or you take this one as your exit signal, or you take when it crosses the 50 period moving average. So it crosses here, so this is where going to be your exit. So your profit is about 40 pips. Now you're trading on the 1 hour time frame, so you made a profit of 40 pips. Okay, let's see what was your stop loss. How much was it? How much you were risking? You were risking about 24 pips. So 24, if you go to 1 to 2 ratio, risk to reward ratio, so that should be 48 pips, but it didn't go to 48 pips. Sorry, it went to, yeah, it went to as low as 56 pips, right? So you can do that. Take 1 to 2 risk to reward ratio, and that's your take profit level here. Okay, now let's have a look at the next trade. The next trade signal you get here for a buy. Now let's bring it here, and you confirm. Z-winner RSI stochastic is also upwards, telling you to buy. This is to buy, but you don't buy because your candles are below the 21 moving average. So you wait until it goes above it. So waiting. Now this candle goes above it, and you're getting the signal here also to buy, and here to buy. So at the open of the next candle, you will buy here, okay, at 1.2189, and then you will put your stop loss here. Let's have a look. The low is 1.2160, 5 pips less, 1.2155. So you bring it here, 1.21555. There it is. Okay, now let's have a look. What is your, how much you're risking? You are risking about 32 pips. So 32. So if you're taking 1 to 2 risk to reward ratio, so 32 and 32 is 64. So your take profit level is going to be 64 pips, which you get here. On this candle you get 64 pips. Okay, so this will be your take profit level. Now remember, you're trading on the 1 hour time frame. Okay, the next one, the next signal we are getting is here again, but it is too small. So this is going up, this is telling you to buy, but your candles are above this one. So have a look here. Here you're getting a signal to sell, right? This is when a RSI stochastic is not in the sell mode, so they are in contradiction to each other. Also, the candles are above the 21 moving average, so you don't do anything, you only buy if you can. Okay, here you're getting a buy signal, and here is also a buy signal, and this is going up above the 21 moving average, and this is where you buy, and then you put your stop loss. Where are you going to put it? This is the most recent low, so you're going to put it here, and your low was 1.21745, so it's going to be 1.2170 or 69, 1.2169. There it is, 2169. So this is your stop loss. Now what are you risking? You are risking about 51 pips, so you are looking for 102 pips according to the 1:2 risk to reward ratio. Now the market goes up in your direction, up and up and up, and the maximum it goes to about 46 pips in profit, and then starts going down, and as soon as it crosses the 21 period moving average, now you start getting worried. So you better, instead of 1:2 risk to reward ratio, you better play safe and get out here. Now if you get out here, you make a profit of 14 pips. Okay, now let's go to 15 minutes and have a look. Okay, here we are on the 15 minutes Euro USD chart. You see the market is in a consolidation, and then at about 8:45 we get a sell signal here. Let me put a line there. Here sell signal is here, and this is going up, but the Z1 RSI stochastic is also going down. Yes, giving both of them giving sell signal. So you're going to, and the candle is below the moving average. So at the open of the next candle, which is this one, we will sell, and then we place our stop loss here on top of this one, or you can put it on top of this one. This is the high, and you are risking about 9 pips only. So you take 10 pips, 9 pips. So you're looking for the profit of 18 pips. So you get the 18 pips on this first candle, this red candle, and you get out. Then you wait for the next signal. Then you get the next signal here, here. When this crosses the, and this is below the moving average, and the Z1 RSI is also going down. So you sell at the open of the new candle, this one, the green one, and you place your stop loss where the most recent high, but this is the most recent high, this one. So 5 pips above it is 1.6872. So the high is 1.6872. So it's going to be 16872. Yeah, somewhere here. So this is going to be your stop loss. Okay, now what are you risking? You're risking about 27 pips. So double of that is 54. So you're going to get 54 profit somewhere here on this candle, 54, right? Okay, now let's see where's the next one. Next one, you get here a buy signal. Everybody going, all the Z1 RSI is also going up, and but the candles are below the moving average. So we wait, and we will get the signal here to buy above the, when it goes up. The candles are very small because it's about lunchtime. After lunchtime, 2, 3, 4, yeah, it's almost closing time after trading hours. Anyway, if you had bought it here, buy here, and you put your stop loss here, in here, so you get stopped out. This is your profit, and you get stopped out here, right? But before you get stopped out, remember you are getting a sell signal here. So when you get the sell signal here, just close your trades and you will be at almost break even. Okay, so you sell your here, you get out first, then you look, you are getting sell signal. This is going down, and below the candles you place your sell order and the open of this one, and you place your stop loss here, 5 pips above the high. The high was 16082, high 1.1608, add 5 to it, 1.16 1613, 1613. That's it. So this is going to be your stop loss. Now let's see where you, how much you're risking. You're risking about 12 pips, 11 pips, so you need 22 pips profit. Here you get 22 pips. Okay, next we find here you're getting a buy signal here, so you buy here above the moving average, place your stop loss here below this, 5 pips below. So the low is 1567, it's coming to 1.62, 1.6, there it is, 1.62. okay, this is going to be your stop loss. You bought it here and the market didn't go that high and it's coming back down, so keep an eye on it, what's happening to the market. Now you bought it here and it went up about 7 pips and then started coming back down. Now as soon as it came down and went below the 21 period moving average, you just get out with a small loss instead of waiting for the stop loss to get hit. So you lose about 5 pips. Okay, so this is how you trade, but you will find it much better on the 1 hour time frame. And if you wish, I can take one more pair. Let's have a look at the Gbp USD. That's it, Gbp USD Pair. This is the Gbp USD Pair, and here again, this one, you are getting a sell signal here, and this one, and you sell here and you place your stop loss about 5 pip above the high of this. So the market goes down. Let's see how much you're risking. You're risking about 19 pips. So the market goes down and you get your 19 pips here on this candle. Okay, and then after that you get another signal here to buy this one. Z1 RSI stochastic is also going up, and this candle goes up above the moving average, so you buy at the open of the new candle, that is on this green candle, and you bring your stop loss 5 pips below this one, which is the low is 3432. So it's going to be 3432, take away 5, 342 7. So 342. Here, this is going to be your stop loss. Okay, now you measure your risk. You're risking 35 pips, so you need 70 pips profit. You get your 70 pips profit here. Okay, so this is how it is. You'll get lots of profitable trades. You will get some stop outs as well, so you have to be careful what time frame you are trading on. And this is how you trade. This is what I have devised, how to trade the vector indicator. So I hope I wish you all the best, and take care, and do subscribe to my channel, and please share it with your friends and your fellow traders. See you soon. Take care and bye bye.